Hey there, investors. Buckle up, because the global stock market is on a wild ride. It's a jungle out there with twists and turns that'll leave your head spinning. But fear not, because I'm here to guide you through the chaos. We've seen some big swings lately, folks. Up one day, down the next. It's enough to make your stomach churn, but remember, volatility is the name of the game in the stock market. So, what's causing all this commotion? Let's dive in and find out. First things first, we gotta understand the forces at play. Remember, the market is like a giant beast with a mind of its own, and right now, it's feeling a little indecisive. Inflation is still a major concern, folks. Prices are rising, and central banks are raising interest rates to fight back. That's putting pressure on businesses and consumers alike. Then there's the ongoing war in Ukraine, which is causing uncertainty and volatility in energy and commodity markets. And let's not forget about the lingering effects of the pandemic, which continue to disrupt supply chains and slow down global growth. It's a perfect storm of uncertainty, folks, but don't panic, because knowledge is power. Let's turn our attention to the good old US of A. The S&P 500, our benchmark index, has been on a roller coaster ride this year. We've seen some strong rallies, but also some sharp pullbacks. The tech sector, which had been leading the charge for years, has been hit particularly hard. Rising interest rates are making it more expensive for these companies to borrow money and fuel their growth. But it's not all doom and gloom, folks. The energy sector is booming, thanks to soaring oil and gas prices. And some consumer staples companies are holding up well, as people continue to buy their essential products. The US economy is still the largest in the world, but it's facing some headwinds. Buckle up, because it's going to be a bumpy ride. Now let's hop across the pond to Europe, where things are looking a little grim. The war in Ukraine is hitting them especially hard, folks. The Euro Stoxx 600 index, which tracks the performance of major European companies, is down significantly this year. The energy crisis is causing real pain, and many businesses are struggling to cope with rising costs. Germany, Europe's economic powerhouse, is facing a recession, and the UK is still grappling with the fallout from Brexit. It's a tough time to be invested in Europe, folks. But remember, the market often overreacts to bad news. Keep a close eye on developments, and look for opportunities to buy when others are fearful. Section 5. The Asian tigers. Are they roaring or whimpering? Now let's head over to Asia, the land of the rising sun. The region has been a mixed bag this year, folks. China, the world's second largest economy, is facing a slowdown. The government's strict zero-COVID policy has disrupted businesses and weighed on consumer spending. Japan's Nikkei 225 index has been relatively resilient, but the country is facing challenges from a weakening yen and rising inflation. Asia is a vast and diverse region, folks. There are always opportunities to be found, but it's important to do your homework and understand the risks. Section 6. Tech titans, energy giants, and the crypto craze. Let's talk sectors, folks. Tech, which had been the darling of the market for years, has come crashing back down to earth. Energy, on the other hand, is booming. Oil and gas prices are soaring, and energy companies are raking in the profits. And then there's crypto, the wild west of the investing world. Bitcoin and other cryptocurrencies have been on a roller coaster ride this year, experiencing both euphoric highs and gut-wrenching lows. Remember, investing is all about managing risk and finding opportunities. Don't put all your eggs in one basket, folks. Diversify your portfolio and stay informed. Section 7. Don't be a fool. Stay in school. Investing strategies for the savvy. So what's an investor to do in these uncertain times? First of all, don't panic. Remember, the market goes up, the market goes down. Now is a good time to review your portfolio and make sure you're comfortable with your risk tolerance. If you're feeling skittish, you might want to consider moving some of your money into more conservative investments like bonds. But don't go overboard, folks. Remember, the stock market is still the best way to build long-term wealth. Just make sure you're investing for the right reasons and that you're prepared to ride out the volatility. Remember, knowledge is power. Stay informed, do your research, and don't be afraid to ask for help from a financial advisor. Section 8. The crystal ball. What's next for global markets? Now, I'm no fortune teller, folks, but I can tell you this. The only certainty in the market is uncertainty. We're facing a lot of challenges right now, from inflation to war to a slowing global economy. But remember, the market always finds a way to climb that wall of worry. Keep a close eye on interest rates, inflation, and geopolitical developments. These factors will continue to drive market sentiment in the months to come. The future is uncertain, folks, but one thing is for sure: the stock market will continue to offer both risks and rewards. Section 9. Stay informed, stay ahead, your guide to market mastery. So, there you have it, folks. The global stock market is a wild ride, but it's also full of opportunities. Stay informed, do your research, and don't be afraid to take calculated risks. And remember, the only bad investment is the one you don't understand. Keep watching CNBC for all the latest market news and analysis. We'll help you navigate the ups and downs and come out ahead. Now go out there and make some money.